What's up, everybody? This week is week three or episode three of Finding Your Way. We dive into creating some rules now that Easy has had some experience with um, finding his market psychology or not trading psychology and practicing with his strategy for the last 2 weeks. We've created some base rules, um, and then we're just gonna help him create. There's there's your strategy rule, and then there's trading rules, and then there's like market psychology rules. Trading rules are, hey, am I in the right mindset of, or am I in the right environment of trading, or in the right environment to trade? Um, did you wake up on the wrong side of bed? Yes, no. Okay.
No.
If you didn't, you want to be on the right mindset. Are you stressed out because something at work, or are you stressed out because some life moment? Whatever the case is, you need to answer those questions. And if you're not in the right trading mindset, you shouldn't be trading at all. And then there's your strategy rules where you ask yourself questions um, according to where price action is in reference to your rules. And that helps you narrate the play of what you want to see, um, things that you want to stack up, and those questions are going to help you stack up those catalysts. And there's market psychology, where is there's going to be a Jerome Powell speech today. Okay, maybe trading today might not be good because um, trading's going to wait until after the speech, or even like during the week. Hey, what's happening this week in the market? Hey, is there any earnings report? Is there any um, data points coming out? How does the news? What is the news saying? Remember, they always say, "Sell the news, buy the rumor." I think is how it goes.
Um,
Uh,
isn't it buy the rumor, sell the news?
yeah, that's what I said, but I said it backwards. I think
Yeah.
whatever it is, but that's the market psychology rule. Are you gonna trade because like Lasagna Cat, he didn't like getting he didn't like trading through data. So on days like this, he would take it off. And now he's adapting to where he's like, okay, what's market psychology? What's a new thing? So he's got rules that he either has created or is going to create, according to market psychology.
And you can
I
find price action that correlates with it as well. So it's the the more you get used to looking at it, it's
Yeah,
easier.
definitely, because you can always bring those rules, those strategy rules,
Yeah,
right, into your strategy. And
yeah,
those will be only specific to those days.
yeah.
Are today's FOMC, um, what usually happens, and then you can reference it later for the next FOMC. I was researching some WD Gan, called Price and Time Cycles. Uh, I found a great book. It's called 45 Years in the Stock Market. And he gives 24 rules of, oh, put them right here. On, um, he created 24 rules I'll just read a little bit of it. In order to make a success in trading in the stock market, the trader must have definite rules to follow them. The rules given below are based on his personal experience, and anyone who follows them will make a success. Um, so let's take a look at your rules, Easy. See what you had. So if you want, share your rules, and then we'll. I will be posting this book and pinning it in the futures chat, and I will be typing up those rules so people can take them.
Yeah.
But he has a great rule set that kind of depend on your account size and your strategy make a lot of sense. So let's go over your rules.
I cannot share my screen because you still have
Go for it. Sorry,
yeah.
go for it.
Okay. So yeah, the reason why I started creating the rules is because Monday I had really a bad day. I think it was Monday that I had a bad day on the stock market. It was the day that what Brendan called the force up. So it was just going up. I couldn't really rely on my indicators, and they were just giving me, I'll say, false signal. So based on that, I decided to create, well, not based on that, but I mean, I had some rules, but I decided to trying to be more strict on my rules, when to take a trade, when not to take a trade. So let's go over the short first, just because so far I've been showing you guys more like short setup. So on the short setup, so I always look at the 5 minute. Is the 5 minute bearish? So is the 10 below the 50 on my SMA? So as soon as the 10 is below 50, that's my first rule that I know that I have to take shorts during that day. All right. Based on that, the other indicator, talking to you, Semper, that I started looking at is the RSI below 50. So when you have that oscillation, I mean, those things is the RSI. Yeah, exactly that is the RSI below 50. So under this line, this is where this is one of the rules that I have. Under this line, I usually would like to take a short as well. MACD, is the MACD bullish or bearish? I started looking at MACD, and also there's a little cross, those two lines under the MACD is something that I pay attention to. Semper was talking about it, and then so far it's pretty accurate when I'm looking at the MACD just to see what's happening. MACD is right there. So yeah, we're talking about those two lines. So here's my red line and here's my green line. If the green is over the red, that means it's going up. And then usually when red is over, that means it's going down. That's one of the things that I noticed. So I do pay attention to that little cross as well, Semper.
Yeah, it's a good indicator to forecast what might be happening. Not to predict, but to kind of forecast. Okay, if it keeps closing in, do you you can kind of see it. Even the MACD is pretty good. Like you see it kind of like it right here, right?
Yeah, okay.
Right here. You see it closing in. So like right here, you kind of see it curving already, right? And what you're doing is you're watching candle develop. So here's a MACD on the chart, right? Because you see it like that. You get the cross, and then you see support. So you're expecting it to come back up, and you're expecting right here to hold the 50.
Yeah.
And then you look at the volume. Volume didn't look too great, but in this consolidation zone, which would be right on that one. There's really no.
Yeah. But that was the force up day. So I said all the indicators,
And
they
force
messed
up,
me up.
yeah, force up days, you're gonna start learning these characteristics of the market. Um, where it during force up days, the 50-10 doesn't work. Okay, so what can I use? Can I use MACD? Oh, okay, it looks like I could probably use MACD. Can I use RSI? Yeah, it looks like I can use RSI. Volume, you have to get good at reading volume. Like right here, look. One of the biggest things that I see right here is these two little bars. And if you look straight up, there's going to be a squeeze candle on this one.
Yeah.
Look at right there. See how volume got sucked down, or half of what the average last 10, 15 to 20 bars are?
Mm-hmm.
Sometimes it'll be green. If they're red, I haven't really been keeping track, but sometimes one is green and one is red. But most of the time, when they're both the same color, it's gonna go in that same direction. So if it's green,
Sure.
if there's too little green, it's gonna pop green. If it's too little red, it's gonna drop red.
Yeah.
Check it out. These the two squeeze volumes, it indicates that squeeze, and it also corresponds with the mounting of two moving averages, which are currently crossing the yellow and the green one.
Yep, right here.
Hmm. Oh, yeah. Okay.
What is your green one?
Um, this is my green one. Yeah. Where you put the X,
No,
that's
what
where the
is it?
green one.
What moving average is it?
Oh, that's the 10. That's the 10 SMA.
Yeah, it is crossing your 50, right?
Yeah. Yeah, the 10 SMA just crossed the 666. That's what happened there.
Oh, okay.
Yeah.
And then this is your 50.
Oh, and it's also worth noting that you have a golden cross as well. So there are a
Yeah.
few things lining up really good.
Especially on a force up.
Yeah.
Like I said before, remember you get the 10 and the 50, right? Boom.
Yeah.
What's the next cross you want to see? The 50-100 right here. Boom.
I'm glad we're going over this because even though I'm a long player myself, I have a hard time with force up days because I'm like, nah, it's too high, it's too high. Like, fuck,
Yeah.
exactly, dude. It's like,
You're trying to
right. It's like, great long move, but if I wasn't in the beginning, then fuck it. But this is this is
this
showing possible plays.
correct. On this one, not just because I play short, it's just that I'm like, okay, it's a force up day. It's way too high. It has to come down. So just like on this trade that right here we have now, it's a red trade for me because I thought for sure because I'm looking at the RSI, it was like doing that, going down, going down. I'm like, oh, okay, maybe it's gonna break from there. This is the 666 that's going to be resistance. And then I took a short entry there, and then no, it just pushed me out. I mean, this is where the candle that I got out right here. It was a small loss, but on the other hand, it did it so many times that day. When my setup showed up at the end of the day, I was too afraid to press on the button. I
Yeah,
just couldn't make that trade.
you're gun shy. But one thing that I see here that helps me kind of identify if it's going to keep going or not
Mm-hmm.
is where price action is opening and closing. And it looks like right here it went under it, over it, under it, over it.
Yeah.
Uh, so sometimes I'll draw two channels like this just to get to that range. If in that range price action starts to close above the 666 and right here, then I would have got in right here, right? Got in long for a breakout. Um, if all these candles would have hit and closed below the 666, then you probably would have had a better chance of it pulling it back at least to the 200 or even the 50.
Mhm.
because the 50 is right here. So that would have been your first target. If candles would have opened and closed below it, not above it. So watch price action in reference. And on the fourth up day, you get 1050 cross right there. You get the 50, 100 cross right there. And the 100, 200 cross right there. And then finally you get the 666 over here. Right here, when you see three crosses, each cross is like more strength. Just think of it like that. So
It's
look,
because the moving averages look really good, but in all honesty, like even though the moving averages look really nice, like there's other things about this chart that would just make me feel like, nah, it's not ready, or like because RSI is in like a weird zone. I mean, it's RSI is in the bullish area, but it never got the 50 pullback completely.
Yeah,
And
exactly.
yeah.
you never
Same
get
thing
the
for me.
pullback, but you get pullbacks into major moving averages.
True.
So right here, it consolidated on the 100 EMA,
Yeah.
right? Above it. See how it's above the EMA, not below it?
Yeah, yeah. They're closing above it. Yeah.
So that right there is what you would want to see right here. Or you would have wanted them to close below it if you wanted to go down because you went short right there, right? You went short right here somewhere.
Yeah. Yeah.
Looks like it
But
was like
based on
right.
my strategy, I should have I mean, I usually wait for the cross of the 10 and the 50. So I wouldn't even short right there unless I'm taking an very early entry.
And that's where you gotta stick to your rules. You didn't stick to
Yeah.
your rules.
That's why I had to write it down. The fact that I wrote it down, but I only did it the next day. If I would have wrote it down and followed my rule, and then yeah, maybe I would have saved that loss. Because one of the
It's all
main
good.
rule is I have to wait for that cross.
As we go through this, you're gonna start with your 5 to 6 rules that you have, right?
Mm-hmm.
By the time we're done, you're gonna have way more, way more.
Okay.
And this is just you talking yourself through your trade, through your day. And I'm sure it helps Brandon as much as it helps me. But when he just started narrating, I was like, oh shit, he's narrating like, like a baseball game announcer or a football announcer. I was like, that's cool. I like it. And then I started doing it and it started helping me. I was like, oh shit, if I talk to myself, I'm like keeping myself in check. It's like, okay, if I don't see this, I'm not getting it. But the way that I develop the questions is just how you develop them is questions, not as rules. You know what I'm saying? A rule would be like 5 minute bullish. And you're like, what the fuck does that mean? Uh, you want to ask yourself a question because you want to talk yourself through the question or
Yeah.
through your price action. And you're only going to get better the more questions you add and the more
Criteria.
yeah, the more you figure out your strategy. And your strategy will adapt. Just keep that in mind. Your strategy will adapt. When we first started Elites, we were in a bull market. Our strategy was different. And I've since seen it change when we entered the bear market.
Correct. That, yes.
So once we go back into a bull market, you're going to be that much better if you started when we were in a bull market. If you did it and you're in a bear market and then you go back into a bull market, you're going to learn what it is to be in a bull market. And it's going to be so much easier. Lasagna, correct me if I'm wrong, but I think a bull market was a lot easier.
Yeah, not it was a lot easier because the systems were less
Simplistic.
complex.
Yeah,
Yeah,
simplistic.
very simplistic. And even the changes within the bull market were easier to identify, because I remember when elites first started, the market wasn't really doing those new low longs. That happened after we were doing elites a lot. I remember Brandon going, "Hey, I've definitely noticed lately that these large caps are doing new low to long, new low to long, like as a fake out thing. Now we just kind of expect them." But I remember when those first kept happening, and like, but since it was a bull market, like I feel like it was easier to keep track of that. And then the bear market is, for me personally, a little more difficult to identify new patterns and behaviors. And also my long strategies are more difficult to identify.
Yeah, that's correct. That is exactly it. That's one of the things that I was hesitating on when you guys asked me to choose my strategy. I was like, but I know right now the market is really bearish. If I say I'm a long player, I will most probably have no trade to show at all. So
No,
that's why I chose.
there's always plays. You see me when I was only long, like not even 6 months ago.
Mhm.
I would there was there was trading with the trend, long trading, and then there's counter trend bounce trading, long trading.
Yeah.
There's
And,
plays. There's at least two plays even in a down day for a long player,
and that's
especially these days.
it is like my setup personally is ideally based on two pullbacks, which is why I was able to get one today, because there was that really nice one. But in the example of yesterday, there was only like straight up bounce plays, at least in the hours that I traded. There might have been one later on, but like there was like support bounces, and some of them were really big, and I was like, oh shit, if there's a higher low or two off of this, it could continue. But it was like, nah, it was like a bounce and then to like straight back down. But I agree with what you're saying. Like, one thing I need to do to develop a strategy for playing those bounces, I just don't have it yet, like counter trend bounces.
Um, and that's fine. That took me, 2 years of being pretty consistent
Yeah,
to finally go short. And you notice this year, I've probably shorted the most ever. I think like the last year and the year before that, there was probably like one or two short trades
yeah,
that I posted each year. This year, I'm posting, at least 10 to 20
yeah.
or more. You'll get there just with the screen time and the studying those characteristics. Like, I don't know if you were, I think you had stepped away, but I told Easy, I told him that I admitted that I look at the chart 18 hours a day, but sometimes you need that break. Um,
Yeah.
and he brought in that he read that he listened to the book, The Hour Between the Dog, where you need to take a break because your brain is still developing or still releasing hormones and cortisol and testosterone, and you're still like, even though you're not trading, you're still in that mode, and you need to kind of step away and take a break. But
There's a futures trader I started following, and she's only in front of the screen like 2.5 hours at a time. Then like one of her rules is just like, yeah, at noon I'm out. It's just it. Not
that's
because Brian plays after that, but just because she knows like what her brain is attuned to for max performance in terms of
yep.
time. Yeah.
Yeah.
And if you
On,
go ahead,
oh, yeah, I was about to refer, I mean, just to make reference to the book, The Hours Between the Dog and the Wolf. So what they were saying exactly, let's say whenever you start trading, so your brain starts secreting hormone because right now it's like a danger mode, right? So your body is like, okay, so I need to be as performance as I can, or I need, if not, you might lose your life. So what happened is that your body starts secreting, you take a trade, and then let's say if that trade is green. So if that trade is green, what happened is that you self-confidence, everything, everything is fine. So that hormone keeps on producing because right now everything is good. On the other hand, what's not good about it is that you are more exposed to danger because you are still in the market, you are still looking at the chart, you still want to take a trade. So the longer you stay in a trade or the longer you're trading is the more you risk on losing. They also make the reference with the animals. They were talking about lions on this one. Let's say you are a lion. So the alpha male always have to defend its territory because he wants to mate with all the females. So after a fight, he's gonna kick the ones, whatever, the other lion's ass. But on the other hand, he has a lot of hormones producing. If he gets in a second fight, chances are he's gonna win that fight because his hormone is still on top at peak performance. But after the third, the fourth, the fifth fight, he's becoming weaker because he's more exposed to danger. So that was the reference that I got from the book. And I was like, that sounds pretty cool, you know? Because, yeah, you are exposing yourself to danger by just trading, I don't know, let's say 3 hours a day, 4 hours a day, versus somebody who comes to the market within 30 minutes or an hour, makes one play, day is done, and close off his chart. So right now, he's not exposed to danger, and then his body or his hormone can start decreasing. So, yeah, that's what I learned about the book.
That goes to show that you only need 2 to 4 trades a day.
Yeah. The less, the better.
Yeah, exactly. You're not exposing yourself to giving back profit.
Correct.
And also, it seems to me that that hormone escalation is so since it's confidence building on confidence building on confidence, it seems to me that at some point that leads to overconfidence, which means you become a little blind to pertinent factors.
And that's why he says that overconfidence, and I believe, let me show you a share from you. This is where we're going to jump into the rules. And hey, easy, these are posted. You could download them on the futures chat. Just go up to the top right, and there's a pin. Right here, there's a pin.
Perfect. Yeah.
And then there's the journaling questions, trader rules, and a couple other books.
All right.
And indicators. But like I was saying, you first want to start out with your trader's mindset. And that's why the first week we had you read Mark Douglas, Trading in the Zone. Because you got to think differently than a normal person. But also you got to have the trader's mindset where if you're not feeling good or you're having a bad day, don't trade. And these are the rules kind of play. Hey, don't chase trades. Don't ever chase trades. And Lasagna Cat said, well, if I get in on the 5 minute, on the 1 minute, it looks like I'm chasing. Yeah, but if you actually traded the 1 minute, you probably would have better entries. Correct. And not entered on the 5 minute, right? And then we jumped into how do you track the 5 minute to the 1 minute, and we'll jump into that later. So wait for your setups. And I had this printed out and hung up on my wall. So when I was over trading, I would just look at it and kind of slap myself on the wrist if I was over trading or overreacting. Don't rush trades. And walking yourself through the trade or through the setup will help you prevent rushing into a trade or even getting FOMO.
What was that?
That walking yourself through the trade or talking to yourself through the setup will prevent you from overreacting, getting FOMO, or rushing into the trade. Because remember, you're talking to yourself before you even get into the trade. You're talking to yourself 10 or 15 minutes before what you want to see to get into the trade.
Yeah. Now that'll take up enough room in your brain for the FOMO voices to not have enough room.
Yep. And then the biggest...
Is that talking out loud or in your mind you're talking to yourself?
I'm doing it out loud. How about you?
If you're in the gym and you're trading, you probably can't do it, but...
No, that's good. So people move away from you, you know? Yeah, exactly. You can smell them.
And that you might grab their attention. They're like, oh, what's he doing? And then that's going to just create more pressure. And you're taking the trade. But I usually talk to myself out loud.
Out loud? Okay.
Or I'm typing, I'm right there typing to you guys what I want to see or what I'm expecting. Uh, but the biggest thing that I got from trading in the zone is you have to accept the trade.
Yeah.
You have to accept the risk. If you're risking too much, then that's you're first off, that's bad risk management. Second is you're gonna blow up your account. Third is you're just gonna get more emotional about that money. You want to risk money that you don't care about losing. If you lose $20, whatever. I'll make it back the next trade or I'll make it back tomorrow if I lose. But you have to feel good about losing that money. And that's why I say, like, 3 months, for the next 3 months, if you're not live trading, save up. Save up $50, $100 a month, whatever it is. And tell yourself that's your tuition for trading. And if you lose the $300, oh well, save up more money later. But don't get attached to that money. If you need to pay your rent, if you need to pay your bills, then definitely don't be trading that money. But if you're saving up and you got, I got $500 I can invest or blow, then go ahead. That'll be your risk. But one of the rules that I learned from right here from WD Gun is it says right here, amount of capital to use. Divide your capital into 10 equal parts and never risk more than one tenth of your capital on any one trade. So that's 10% of your capital. If you got $1,000, don't risk more than $100.
That's like 2 points.
Well, that depends. You want to trade MES, and that's the way we started with Lasagna. We started with MES. We're not on ES.
Okay.
So if your capital is 100,000, then your stop loss would be $1,000 or 10,000, which is a lot. If your capital is 50 grand, then don't risk more than $5,000.
That's
or whatever.
Okay.
But you're referencing the ES. You have to have a large account to trade that. If not, then do what these rules say.
Don't.
And I bet you'll be guaranteed. If it's 1/10 and you're on ES, then fucking jump down to MES. You're not ready for ES. I didn't get to ES until probably like a year and a half, maybe 2 years after I traded MES. After I was for sure that I was consistent, and I built up my account to 12 grand, I jumped over to MES or ES.
Yeah.
And I had 12 grand because that was the maintenance fee. So I knew that I could hold one contract through I can swing one contract and not get punished, That's where you want to get, where you can swing contracts overnight, because sometimes the move happens overnight. And it happened a lot this week, like 2 or 3 days this week. But I'm going to type these rules up. We can go through them.
Yeah. I have a question on this one based on the capital that you were talking about, because based on my rule, I have an A setup and a B setup. And on my A setup, I tend to take 2 contracts. And then on the B, of course, I take 1. I don't know if you can comment on this one. And then like right now, even though I'm still trading the same, is it a good thing, or should I just keep it up to 1 contract, get in and then get out of the trade?
I would trade whatever you're going to trade. If you're going to trade 2 contracts starting out, start with 2 contracts and don't jump from 1 to 2. Okay. You can scale in and scale out. We'll teach you that later. And with multiple contracts. Because Lasagna Cat started with 1 contract on the MES.
Okay.
And after he consistently hit green for a week and a half, 2 weeks, we jumped over to 2 contracts. And then the same thing again, once you hit for a whole nother week. And this is depending on you. If you had 15 trades or 20 trades in 1 week and you had like 15 green and 5 red, then yeah, you can scale up. But if you had like 10 green and 10 red, then yeah, you probably gotta go another week.
All right.
And that's depending on how much you lose, right? Like if your reds were bigger than your greens, then definitely go back to 1 contract or whatever. You got to scale down and go back to sim. But yeah, we'll show you how to scale up. Because the way you build that consistency is you're building that confidence in your strategy. Because I know there's some traders that are always gun shy. Oh, I seen the setup, but I didn't pull the trigger. Or, oh, that was my setup. I didn't pull the trigger. Something is scaring you from pulling the trigger. And you got to figure that out. Whatever it is, whether it is not having the right trader mindset, something fucking with you. Remember, don't live in the past. You can't change the past.
Mm-hmm.
The future is not guaranteed. So be in the present, trade that day, and let the past go. If you blew up, I blew up 3 accounts. I had to let that shit go. But the hardest lessons were blowing up those accounts. But guess what? I remember that shit. And I won't do it again. But anyways, you gotta figure out what, like, just be emotionless. We've posted Connor's video. It's a really good video. You should probably just look up emotion on Discord and you'll find it. I'm pretty sure.
Yeah, was it that video with the $20 or something?
Yeah,
it was like coffee.
Yeah, I remember it.
Somewhere in here. But anyways.
Yeah, no, I know which video you're talking about.
But rewatch that and keep calm. You want to be calm because it'll help you reset if the trade goes against you. And that's why having a stop loss helps you minimize your risk. Because right here, he says, use stop loss orders. Always protect your trade when you make it. With the stop loss order, 3 to 5 points away. You don't have to do 3 to 5 points. That's just according to you. But always protect your trade. You don't protect your trade, you're gonna be like, you're gonna bag hold. And when you're barely starting out and you don't protect your trade with the stop loss, trust me, you're gonna be like, oh, it's gonna come back up. It's gonna come back up. It's gonna come back up, and it never does.
Yeah.
In general, my stop is like between 1 3/4 points to like 3 1/4 points. Now, you usually don't go beyond 3 1/4 points. Today was different though because the range was pretty big. So candles were big.
But remember, your stop loss can adjust if you have a buffer or if you have a cushion.
Right.
So if your first 2 trades go green and you're certain on this trade, well, obviously you're willing to put some money on the line, right?
Yeah, for sure.
Because you're saying, okay, worst case is gonna bounce here. If it breaks here, I'm out. Fuck it. I give back $20. I'm still 30 green. But you have to be calm, cool, and collected about it and be able to just be like, okay, you gotta accept the fact that the trade might not go your way. So those are the traders.
You would need to have the same confidence in your setup though as you did when it hit your initial level for stop. Like you would need to feel like that setup was still grade A, even though it's going a little lower than you thought.
Mm-hmm.
That water can get a little bit muddy, but I've been there where I believed it enough that it went a little bit down, then it came back up. But it's like a lot of times though is that if it hits that initial stop, it's like often to me it's like, all right, it's no longer grade A setup if it goes any lower anyway. Which isn't necessarily the truth, because setting a new low is often the signal that's going to go long again. So like that water is like I hear you, and like for me that's even a little further down the road, because right now having that hard ordered stop is like, to me it's just like a guarantee that I don't even have that aspect of the trade to even think about, because it's just set in place.
That's where candle development and price action reading will help you.
Yeah.
Where you'll be like, oh, it broke my support level, which would have been my stop, but this is a fresh low breakout.
Right.
So it's going to create a fresh low, and then it's going to break out. Or the other way that I kind of do that is, okay, is it forming a falling wedge?
Yeah.
The falling wedge breakout is pretty good, and it helps you kind of be like, okay, it's going to go to here, and it might hit this moving average. And if it hits that moving average, pay attention to see if it's going to have a falling wedge breakout.
Yeah.
But yeah, and then you get into the daily market approach. Easy. So every day, you were saying like you do the weekly and the daily. Yeah, you have to have a sense of what's going on a week. How is the week setting up? How is the week setting up? Because in that, it's going to tell you how the daily is going to set up. So, you just jump on the weekly. And remember, last week we said it was going to be kind of like a head and shoulders. And look at last week we said it. I predicted that we might get to HCR and then come down.
Mm-hmm.
So we passed HCR. We hit the 10 SMA. To me, since we already busted through the 10 SMA with this big red candle, and now it came back up and tagged it, what is that? What's that called? Does that like it?
Oh, pardon. I was making a note. What was the question?
What is it called when a price action smashes through a moving average and then comes back and tags it?
Oh yeah, it's the retest.
Retest. Yeah.
Retest or confirmation, right?
Yeah.
Mm-hmm.
Confirmation short. So now that we broke the 10, now I'm thinking the first closest is a 21, which it caught it right there. It caught it. So if it busts through the 21 EMA, it's going to go to the 50 EMA. Quite possibly the 100 EMA, because I know some of you don't use the 21 or the 100 or the 50 EMA. For those of you that don't, this might come down in the next 2 or 3 weeks all the way down to the 100 EMA. And if it loses that, the 50 SMA is below the 100 EMA. You know what that is? It's the death cross. And it crossed over here. It crossed right here. On this red candle right here, this big red candle. It crossed. And it might come down to the 100 EMA, and it crossed right there. So it will come down probably in September. It's setting up for next week, September. Next week, what is next week? Oh, so it might have one more pop in it, and then September is going to sell off. And that'll give us 3 weeks all the way down to the 100 EMA or 50 SMA. Now, this is a prediction, but like I always say, I always look for dojis. So look at this doji right here. That has good confirmation right here. Look at it. And I always do the top of the body because that's where it might bounce. Look at it. I had these 2 wicks bounce right off of it. Boom. This little doji right here. That's 2 dojis. And then look at almost perfect rejection, perfect rejection, perfect rejection, perfect, perfect. 3 dojis right there. And then look at almost perfect right there. Body. But I see this little floater right here. This is the last line of defense right here. Trust me, these little dojis, these little floating dojis are very strong. Look at yesterday, it bounced off of it. And then it had a split right here. It had this top right here. And then it had this hammered doji right here. And then look at this little floater right here. Boom with that resistance. So that's my call out. So it'll go to here. I already tagged it. So next thing is the next day to bust through it. And then possibly come down to the 50 EMA, which lines up with that doji. When MAs line up with doji levels, pay close attention. Those would be strong levels. For you, Easy, these dojis will line up with your 50 SMA or your 10 SMA. Pay strong attention because this is a daily process. So you go through the weekly. The weekly is stronger than the daily. The daily is stronger than the 30-minute. The 30-minute is stronger than the 5-minute. It goes all the way down. So then you go to the daily. What do you see here? You see any dojis? I see one doji right there. Perfect. Look at doji. Tag and went up. So on this red day, right, the market's closed and it opens outside of it and it's going down. Where do you think it's going to bounce? Probably off that doji. So then you go to the 30-minute. What's the 30-minute look like? And I have too many lines to kind of, but if we go back to
yeah, but on this one, something that I want to say is that I know you're looking at daily, weekly. That's why I said I'm still not comfortable at such high time frame. That's why I look at the market like 5 minutes at a time. So on a 5-minute candle, and then I'm making my entry on a 1 minute. It's still hard for me to go and look, let's say, even past the 30-minute.
No, but what you're gonna develop, and this is what I want you to develop and create this habit, is you're looking at the chart, all of them at the same way you're looking at them on the 1 minute.
Mm-hmm.
So if you see the 1050 cross, right?
Yeah.
What are you looking for? You're looking for a bullish week. The week is going to be bullish. So that's going to give you a daily expectation. And you look at that. Okay, we're right here. Okay, the 50-50 cross. We created a lower high off the 50 SMA. So what are you expecting? Down, right?
Yeah, I'm expecting a dip to buy.
Exactly. So now you got, okay, on this day you got bearish because it created a lower high off the 50 SMA. Over here you're bearish because it created a lower high off the 10 SMA. And then you waited for your 1050 cross right here. And then you waited for the confirmation down right here. So this whole day, as soon as they hit the 50 SMA daily, you're thinking short.
Yeah.
So right here at 44.87, you go to the 30-minute. Where's 44.87? Yeah, it's way over here. But I don't even mark it off. But you're right. Somewhere around this vicinity, right? You're looking for your confirmation on the 30 to get in short. Because remember, the daily told you were going to be short for that day. And then you're like, okay, well then how do I get in short? So now you're looking for a short setup. Okay, where's the short setup? You look at the same chart the same way.
So the same strategy that I'm using on the 1 minute, you'll use it on a weekly, and then you'll bring it down to a daily and even to a 30-minute.
Yep. Same way. Okay. You look at the same chart the same way. Because if you start looking at them differently, I mean, you have the same moving averages on all the time frames, right? They all act the same. They're not going to change characteristics just because it's on the daily. Yeah, it's going to take a whole day for it to hit that level, right? So you have to wait a whole day, but it's going to tell you on the daily, okay, am I long bias or am I short bias? And these were these questions. Look, is a trend, is a weekly trend long? Yes. Okay. Is a daily trend short? Yes or no? When they stack up, when the weekly stacks up with the daily and the daily stacks up with the intraday, then you're good. You're going to be in sequence. And that's why you want to try to find out the long-term trend, right? Because remember, you got to look at just like Lasagna Cat says, he's not good at counter trend trading when he probably is when he looks at the daily chart.
Mm-hmm.
Because it might be a short day, but it's set up long for half the day.
Yeah.
Right? So he doesn't know it yet, but he might be counter trend trading a daily chart.
Yeah, that is actually a factor that I'm pretty aware of. And it's like I'm aware of it in a sense because I can see it in certain stages. But I can't see it like I can't see it without a certain bullish formation. And then when I look at it later, like I see one of those really fast, like really like vertical bounce moves, counter trend, then I think of it in relation to the daily chart, and I'm like, duh, it just did a confirmation. You know what I mean?
Mm-hmm. And that's why do you think that Brandon has the daily levels marked off on his 1 minute chart? And why do you think Brandon is buying the freaking bid at those levels? Because they line up and they're stronger support and resistance lines.
Yesterday was a good example, not with a level, but with a moving average. It was the daily 50 SMA that triggered the short that lasted all day long.
Yep. And that's why he has them marked off. Like I told Easy, his daily, he come into the daily, right? To the daily chart. He came into the daily and it opened up, way up here.
Yeah.
It opened up way up here. Remember there was a gap? Or whatever you call it. It opened up way up here. So then you're saying, okay, it's too close to the 50 to not hit the 50 on the daily. Because it opened up right here. So you're saying to yourself, okay, I'm going to wait for a tag of the 50. And this is where candle confirmation comes in, because look at this doji right here, these little dojis. Look at what happened. It hit those dojis and kind of hit the 50. But if you look at it close, it didn't hit the 50. It hit it on SPY, but it's still the same difference. You hit that level, look at that doji level lines up with the 50 SMA. You put that level right there on this green day, and that level is your confirmation down. So once it hits the 50 SMA on your other time frames or on the daily, then you get in short as soon as you see a lower high. You don't get in. I'm not at Brandon's level yet. Where I mean, the other day, sometimes like I said, it depends on how the candles develop going to your level, and then around your level. Because sometimes, especially during data days, it'll wick down like 4 or 5 points, and then it'll get sucked like almost immediately in like 2 or 3 seconds. It'll get sucked right back up, and the body will hold the 666. Right. So what's that tell you? The buyers are rushing in, and as soon as it holds that 666 on the next candle, you can get in. But having the daily level is gonna have you okay. So once you hit that daily 50 SMA, okay, now I can start looking short. And now you wait for your setup. So at 44.87, that's way up here. I don't know if it's gonna do it all. But anyways, you would have started looking for lower highs somewhere over here. See a lower high? Oh, you see a lower high. Okay, I'm going down. Because then what's going to be your target? If it hits a 50 SMA for confirmation, your first target could have been the 10 SMA. Look at which is almost HCR. That's almost 35 points right there. You could have traded just using the daily chart.
Wait, I just realized it's power hour. I was expecting a bigger dump than this. I mean, it's almost close, but I was expecting a bigger dump.
So what's that tell you?
Mm-hmm.
Right now, the 1 minute, it's around the 200 SMA.
Mm-hmm.
It looks like a rising wedge to me on the 1 minute. Let's go look at it. It's 15 minutes. On the bottom, look at these. Yeah, let's start. So it's a rising wedge. This is kind of the way I do them. Copy, paste it, and then move it over here. And then try to catch something right there.
So it's supposed to go down.
Yeah, but this market's closed. It's close to the 200, so it might bounce up to the 50 one more time.
Mm-hmm.
And then go down like in 10, 15 minutes.
So an after hour.
Yep. So they're going to pop it possibly to this trend line or the 50 SMA. And then, like I said, 10, 15 minutes, they might dump it back down. But look, it's an ascending triangle too. So it might go all the way to like closing at 2. And what do you think is going to happen on Sunday?
It's gonna
Gonna
open gap
it.
down. Oh.
Maybe a gap down, but most likely it's going to go down.
Okay.
And don't take my word for it. I'm just briefly checking it out.
Yeah. I know.
But oops. Back to the rule. That's why you want to look at the daily, because you're gonna get a weekly and then a daily, and a daily can give you the move for the day. If you're looking short, but the daily's telling you long, what's that telling you? That okay, let me change my long bias long and look for a long place. And then, like I said, you're gonna locate key entry points on the weekly and the daily. Moving averages, these are the ones that I use. You don't have to. The 10 SMA.
Yeah, those are the one I use as well.
The only one that, the 10 SMA.
Oh,
but
you're missing the 10. Yeah, you're missing the
yeah.
10.
But that could be whatever moving averages you use, because you're reading that book, the hour between the dog and the wolf. Your eyes will adjust to whatever indicator you want to use. That's why I'm saying don't switch up your strategy. Let's concentrate on you using only a chart that has pre-market data.
Perfect. Yeah.
Forget the other chart with no pre-market data right now. Like
yeah,
if you want to use it later, go right ahead, but just know that you're gonna have to readjust to that type, and then you're gonna have to learn how to reintegrate it into your strategy. And then you're gonna identify high probability setups. RSC Mag RSI MACD. You always hear me calling out, okay, the 5-minute RSI looks bullish, 30-minute looks bullish, 1 minute looks bearish. What's that telling you? That's probably going to be a pullback on the 5-minute on the key entry points so you can get in.
Mm-hmm.
And then you analyze your play signals. Remember, I told you last week that the RSI signals ahead of time what's going to happen, especially with divergence. And the divergence can happen at the overheat. It can happen at the overcool. It can happen in the middle of the freaking channel between the 50 and the overcool, or the 50 and the overheat.
Yeah.
But pay attention to those higher lows or lower highs, whatever the divergence is. And then you're going to work your way through the chart. What's MACD look like? And if you have them reversed, then reverse this order. But print this out or readjust it to how you look at your. But these are in order of the way that they signal. And I get the main signal off a moving average or a price action move, how the candles are developing. And then I look at the RSI. And then MACD and then moving averages.
Okay.
So this is kind of not messed. The price action should be up top. And then execute your trade on your good setups. Don't enter bad setups. Do not rush trades.
What's a bad setup when you say don't enter bad setup?
Like the screenshot you just showed where you went short on the 666. Okay. That's not your setup. That's not your setup.
Oh, okay.
So don't even think about entering that setup.
Okay. All right.
Once you get to know the other moving averages, once you get used to them, trust me, this I didn't get used to like overnight.
Mm-hmm.
When I start seeing the price action stair step, like from the 10 to the 50 to the 100 to the 200, that takes time. And you'll be able to enter in those moving averages after you laser in your setup. But guess what? When you're waiting for your setup to happen, you're going to start to see all these other setups where like it pulls back to the 200. Okay, it looks pretty strong. It's going to pull back to the 200 and it's going to go up. And I've heard you guys ask me, well, how do you know? It's just experience, screen time.
Okay.
But pay attention to candle development. And then this is kind of how to look at the chart. And that's why I always have pre-market data. And then you analyze it again. These are where the characteristics are. The pre-market, 2 hours before at, power hour, during power hour. What happens after power hour? And what happens after power hour? Look at what it says. Where price action opens up.
HCR.
Because Brandon always says, if price action opens up inside the previous day candle and it starts creating higher lows or lower highs, then look for the HCR play, half candle retrace. If it opens up on a gap, right? If a gap, like if on Sunday it gaps down, okay, then expect maybe if it starts creating higher lows, like if it gaps down and it bases and it starts creating higher lows, then expect that gap to close. Maybe not after hours, maybe in the pre-market, or maybe at open. It's rare, and it's been rare for ES to leave gaps open for longer than a week. And look, we barely closed one this week from last week. So it is a different time, but you'll start to notice those characteristics. And then mark off your high probability trades. Mark them off. Like that's why I have you mark off the daily and the weekly level, because when they come over, I'm not sure if you have the multi moving average study from 709?
No, I don't think I've done. No.
It's really good because you would have caught the 50 estimate short.
That's one of the best studies. So it's so useful.
So see, it has these dotted lines. Look at it right here. Boom.
Yeah.
Hit the 90 EMA daily. Hit the 90 EMA daily. I only have the 90 EMA daily on the daily chart because that level is still a significant level. But the 9 and the 10 are still on my chart.
Okay.
But anyways, you have these daily levels. You can mark them off. If you don't have this study, you don't have to use it or buy it, but I do recommend you mark off those levels. And that's where it saves you time. Because you're over here on the daily, right?
Yeah.
You're marking off the 10 right here. And then you're marking off the 50 over here. And keep in mind, these move throughout the day. So yeah, you marked it off right there, but the 50 might move up over here. That's why it helps. 709, most of the studies that he created, they're to make our life simpler, especially with the elite system and the system that we use. But yeah, mark off those daily levels, those weekly levels, because they definitely come into play. And even like the pre-market low, pre-market high, those are significant levels too. You can see right here, rejection, pre-market high. Where is it going to go? I want it to go down to the 666, confirm it for another leg up. You're going to pre-market open. Previous day close was right there. That bounced off right here. Previous day close. Where can you take it to? Pre-market high. But back to the rules. It just says screen time and journaling. And these are my high probability setups. RSI, MACD, TTM stack, the moving average play, the Fibonacci, trend line confirmation, and then key levels. Remember, I always say on ES, doji levels, doji levels, doji levels. They always come into play, especially when they line up with the moving average. Yesterday or the day before, we caught the 666 bounce. It was Brennan had a daily level there. I had the weekly doji level or the 30-minute doji level lined up with the 1 minute 666. So I entered. And then you just get your key entry points. You know,
And
what do
those
you want
key
to see?
level, do you still do it with confirmation, or it hit it, you enter?
If it's a weekly level, I'll probably size in. So if it hits a weekly level, I won't go full 5. I'll go in like 2. And then I get my confirmation, I'll add 2.
Okay.
But I'm averaging up, not averaging down sometimes.
All right. Yeah.
That's it.
Okay. Well, I'll keep on working on my rules. I need to add more for sure. I mean,
I thought I had a different one. Well, do you have any trades you want to recap?
I think that was the only trade that I had. I mean, that was the only one that I was so frustrated on that day that I got traumatized. Besides that, the other ones were just, I mean, they were winning trades, so it was okay. I mean, it's really, I guess, more screen time on this one that I need to do. Because
Yeah.
sometimes, just like this week, like I said, this week my setup, I didn't see it too many time appearing, and then guess I was getting more impatient than anything. One of the rules that I know that I wanted to add was trading during like big news day, just like today.
Mm-hmm.
I had said that before that I wanted to trade at least 5 minutes after the news, so that at least to let the dust settle. But I think somebody had mentioned in the chat you should even wait 30 minutes after the news. And based on today, as a perfect example, like I was for sure thinking that the market would have ended the day red, but then yeah, it turned out to be a freaking green day. So I just need to reevaluate that one.
And you'll get it. You just, like you said, you just need screen time, and it'll come. Um, gotta have more rules. Hey, Zycat, do they have more rules?
Did you have more rules?
Like the question, the what?
Did you just ask if you have more rules?
Yeah, that's what he asked, if he had more rules.
Oh,
No, remember I thought I had. Can't
yeah,
find it.
you had like a screenshot that had like your 4 plays, like right on one screenshot. Is that the one you mean?
Well, all the questions that I asked myself, or
Yeah,
you,
yeah.
maybe you provided that.
I know I've got one for how I narrate myself through the day. You had one as well. I don't know if you ever pinned it. I actually might have saved it somewhere if I could just take a look real quick. I also have my own document. Um,
Yeah.
but let me see if I can locate yours.
Or maybe share your document and I'll pin it because I can't find mine.
All
I thought
right,
I had it saved on here.
Let's see. Found my other computer. I'm going to email it to myself real quick.
Oh, you found it?
I found mine, but I might be able to find yours as well, and I just need to email between computers. It'll just take a second.
Okay.
Yeah.
How many red trades did you have this week, Leezy? How many greens?
Um, Monday was red. Wait, let me just check here.
I
Yeah.
thought you said Sunday you took a trade and it was green, but I could be wrong.
On Sunday? No, no, I didn't. I didn't. No, I mean the green trade that I went. I mean, after I wrote those rules and then I took a trade, that one was green and then it was like perfect to the T. But if not, I'm just looking here. So week of the 21st. Week of the 21st, that was yesterday. The 24th was green. The 23rd. The 23rd was the one that I showed on screen. That was red.
Hey, Semper, I did find your screenshot right now on this computer. Should I just like put it in the futures chat?
For screen.
You just check.
Oh, I didn't hear that. Should I drop it in the futures chat?
Oh yeah, go ahead.
All right, cool. And this is your screenshot that sort of shows your questions for 4 different plays.
Oh, I did.
Let's see, futures. I mean, you might have updated it since this, but this is like the most recent one I had.
Oh yeah. Yeah, that's the one. I can't find that. I have it posted. I could scan it,
Yeah.
but I thought I had a digital version of it. Either way. So easy this week. Look at that screenshot
Mm-hmm.
And then maybe ask yourself or create some, kind of just create your own questions out of those questions. Because you look at the RSI and MACD, you don't look at Bollinger Bands. You can look at the 200 and the 666 moving average play um, questions because you'll use those later. The fib you don't really use, but there might be some other questions in there.
Okay.
Um, but yeah, as we refine your setup, you're gonna create more questions.
Yeah. That's good. Yeah. So far I have 3 questions. So yeah, I intend to add more. Yeah, it's just by looking at the chart and then trying to see other conditions, something that's gonna pop up and be like, oh, maybe I should put that as a rule.
And exactly, that's why journaling helps because when you go in a red trade and you ask yourself, what you saw and what you could do better,
Mm-hmm.
you will develop questions from those 2 questions.
Okay.
I got that theory from 7 levels of why or something like that. When you ask yourself why 7 times, like why are you trying to make trading your career? If
Mm-hmm.
I ask you that, right?
Yeah. Yeah.
You're probably gonna say like, "Oh, I want to be able to trade and have freedom." Okay, why? Why do you want to have freedom?
So that I can do more stuff that I want to do.
Like you can concentrate on opening up your own gym, or you can concentrate on something else, right?
Mm-hmm.
Okay, why do you want to do that? Why do you want to open up your own gym or whatever, right?
Yeah.
So you're gonna go, okay, and then you're gonna, because you like helping people. Okay, why do you like helping people? You're gonna go in 7 layers deep to find your true why. And that's kind of how I developed these setup rules from asking myself what I could have, what I seen and what I could have done better. And then the next day and Lasagna Cat had a good week where he took a bad trade because it's his setup. But right away when he posted a screenshot, I had told him that he rushed in and he took it too early.
Mm-hmm.
So then he jotted down. He jotted down what I kind of told him. And then the next day, he seen the exact same setup. And guess what happened? He waited
And
for
then
the
take it.
optimal setup. Because the first time he got in too early, the first time he got in too early, but the second time he nailed it.
I remember that day very clearly.
And that's what will happen with you. And that's why I'm telling you, okay, like if you show me your trade, I can probably tell you if you're too early or why you got in or why I think you got in. And don't even tell me. You just say, "Hey, I took a red trade. Can you take a look at it?"
Okay.
And that's what Lasagna Cat said. And then right away, I told him, "You got in too early." And then on the recap on Friday, we dug deep into it and showed him how to correct it. Or I think it was a private meeting that we had, but I showed him how to correct the next time. And
Yeah.
literally the next day, he fucking nailed it.
Yeah, and the reason why that day is so memorable to me is just like how effective the distinction of that was and the lesson of that was. Um, because it revealed where there was a hole in my setup and how to correct it. So that was awesome.
And you'll see
Perfect.
that easy. You'll start to see like those holes in your setup, and we're gonna plug them up.
Okay. Then that's gonna be one of the focus for next week. Not only I'm gonna try to follow on like 99% of the rules, but then also the red trades, I'm gonna document them and then take screenshots so that I can show and ask questions regarding that.
Yeah, definitely. Um, Thanks, Yo. Have a good one. Yeah, definitely. Like I said, Lasagna Cat would always post his red trades and he would post his green trades, but he learned the most from his red trades. And we found those holes and we plugged them up. Now it's just, okay, you're going to keep adapting your system, adapting it. But the number one rule is to stick to your rules.
Okay.
Because
Number one rule,
how,
stick
how,
to your rule.
how are you going to correct something when you're not sticking to your rules?
That's right. When there's too much variance, you cannot find a consistency in that variance.
Exactly. Exactly. You couldn't have said it better. If you're like breaking this rule and we're like, well, why did you get in? Well, because you broke that rule.
Mm-hmm.
If you would have stuck to that rule, would you have gotten in? Probably not. But then like 5 minutes later, you'll see your setup set up like your grade A setup. And then we'll correct it, right? You'll write a rule for that.
Yeah.
And then on to the next hole. Okay, I followed all my rules. What's going on? Okay, you gotta wait for this or wait for something, whatever that is. But it all comes down to following your rules and being patient. Those two things will create consistency. If you're just patient like a sniper waiting in the bushes, you know, waiting for that guy to walk in your path. That's what you're doing. You're right there in the bushes waiting for price action to come into your crosshairs.
Perfect.
And then when it comes into your crosshairs, you gotta pull the trigger. But remember, trading in the zone is accepting the fact that not every trade is gonna work out. Accepting the fact that not every trade is gonna work out. Just because you have a strategy, Brandon always says not one strategy works 100% of the time.
Mm-hmm. Or it works until it doesn't.
Yeah. And if you did, you probably wouldn't give that strategy out.
Okay.
Or if you did, you'd probably charge, 50 grand to get it. But just keep that in mind. Sometimes there will be days that you're gonna take a trade and you followed all the rules, right? But then
Mm-hmm.
there's market psychology rules. Did you follow those? I've been burned where I followed all my rules. Price action was to the T. I had a grade A setup, and then I forgot data was coming out, and then they whipped down, stopped me out, and then squeezed right up. So I was right, but I forgot that there was data coming out. And then once you get used to playing through data, and Lasagna Cat's proof, he would not even trade during data days. Now he's trading through data days. But he learned. He learned what he didn't know. Just like I learned. But I
Another
was
thing, now for the last couple of weeks, I've even been doing, if I spot my setup in pre-market, I even play it through the open. I've started doing that.
And that's awesome. Remember, both of us, we used to wait 5-10 minutes past the open.
Oh, it's like a cardinal rule not to play through the open. Now we're doing it.
Exactly. So your rules will adjust as your experience levels up and improves. But patience, sticking to your rules, and having a solid strategy will help you.
Perfect. Yeah, that's the plan for this week.
I only got 3 minutes, so I don't know if you want to recap one real quick, like that.
Yeah, I could do a quick one. Actually, yeah, where was that? I had a good trade from a couple days ago, a good green, right? But
Mm-hmm.
I did a paper cut right before it, so it was a reset trade, which is kind of why it would be a good idea to do that one. Where did I put that? My bad, my bad, my bad. For some reason, I keep thinking that, like, how August is the eighth month. For
Mm-hmm.
some For some reason today, I keep thinking that August is the 5th month, and I keep on thinking about 5. I don't know if like I'm on some weird numerology thing right now or what. I don't know what's going on with me.
Yeah,
So where was that?
you'll start to see these numbers.
Yeah. I want to find this thing. Wait, that's it. And that. All right, yeah, that's it. Yeah, all right, I found it. Yeah, that's it, right? Yeah, that's it. What date was that? All right, yeah, that's from the 22nd, which was a few days ago. Yeah, all right, I'll share a screen. I'll run through the green real quick, and then I'll focus on the red because the red was like my first attempt at this. And the red that I took definitely represents the main jumping the gun habit that I have like going on now. So, wait, we probably only have like 1 minute left, right?
Go for it.
You gotta
5 minutes
go.
over,
Yeah, I'm
don't
watching.
matter.
I'll do this like mad quick. Can everyone see my screen?
Yeah.
All right, cool. Where the fuck am I? All right, right here. All right, so I'll show the green trade real quick, and then I'll show the red trade real quick. All right, so here's the green, right? Looks pretty good. Let me show you the large view of it real quick. So that was the big dump. It's like a big dump first. Here's the open where this line is, and then all right, I'll show you the closer view real quick. So here's the close view of that. That's right after the open, got a higher low, and I saw it, nice higher low right here, and I saw it catch the 10 SMA, right? And so I went long, really good TTM. This was one of these RSI situations where like it's holding under the 50, but still I see MACD, I see it catching the 10, and like even though RSI is that, I'm like, all right, I still think it's long. I haven't cracked the code of that, but it's sort of like from more screen time, I'm noticing this. And it's my habit. Target was the 100. It's my habit to like take off here, like closer to the 100. Actually, I would have liked to take it off here, but I think maybe SPY was showing a resistance. Either way, I'm glad I kind of did because if I did that, I might have gotten like lost in that double top and gone down further. So anyway, that's the green. Looks good. I like how I did that. Let me just switch over to the red that preceded the green because I initially tried to get in here, and I'll show you why. Sorry, I'm going quick, but like we only have so much time left.
Oh, good.
So here's the red, right? So it was only like maybe like 1.5 loss, and so the reason why I took this was I took this to be the first lower high. Higher low. I took this to be the first higher low. So I was like, all right, cool, we got a higher low already. And then like I drew a fib here. Sorry, the fib isn't on my chart, but I drew a fib from here down to here. And when I saw this nice low, I was like, hey, cool, second higher low right there, And and then I saw like squeeze up here, come down, and I was like, oh, nice. This kind of like tells me that it has potential to go up because I'm still getting higher lows on RSI, So I actually got in here because it was like one tick above where this body closed, the red body, and it ended up coming down here. And I was like, shit, nah, whatever. I just think I'm like too early on this one. Meanwhile, that would have been the best possible entry to go back up. So like, which is actually not true. The best possible entry to go back up would have been here because that's one tick above the low candle. And we're talking about like the leg entry here.
Hey,
this
but
happens to be was the lowest. Oh, go on.
Even though because you said you entered on this candle, right?
Yeah, like the top of it, like you see where it kind of like close. Like what happened was it opened. I think it opened green like that, came back down, and then squeezed up. I think that's how that candle went because when I entered, it had not gone down at all. So I think it entered up that one tick, then came down, then squeezed back up.
And this is where candle development comes into play. Some other traders said, don't stop out on wicks. Stop out on hard open closes.
Yeah.
But either way, your entry, you got in because this was your lower high, I'm guessing.
Yeah, higher low.
Yeah, higher low.
Yeah, that was it.
you could use that dotted line, a hard open close below that line,
Yeah,
and
which
that's
makes a lot of
something that's
sense.
helped me. What's that?
That's standard deviation center.
Yeah. So the thing that saved me a lot of getting stopped out or wicked out is a hard open close. Like if the body closed down here, yeah, I would that would be an acceptable stop,
Yeah.
even if the next candle popped way up.
I'm sure it's squeezed up real quick too. That's usually how that shit goes.
And that's what I'm telling you is maybe have a mental stop right here, but
Yeah.
a hard open close mental stop. Like
Right.
if it breaks this and closes right there, I'm hitting close.
Mm-hmm.
Whether it's because if you hit close, it's gonna market you out, so you might have some slippage.
Yeah. It's
But you
not a
can
lot of
have that.
slippage on MES though. The slippage is
Yeah,
negligible.
yeah,
It's
exactly.
yeah, still not
Uh,
preferable. Small for slippage.
that's probably the only thing, dude. Like, it was a good entry. You got in right there because it probably popped up, right?
Mm-hmm.
And then it got sucked down, and then the last, like Brandon always says, and you gotta get these little nuggets. Like the last 10 seconds of the candle, it'll get sucked up. Sometimes it'll get sucked up immediately. If it gets sucked up immediately, like it shoots down and then it gets sucked right up,
Yeah.
it's gonna have enough momentum to pop up.
Right.
But if it like, and this is where you catch the momentum, where if it waits until the last 10 seconds, then buy the bid right here and then ride it to the next moving average and get the fuck out.
True. True.
Um,
Why would you get out on the next moving average though? Because you
it,
could wait, like if it goes there, you could wait to see if it loops this, which
you
is what
can,
yeah.
you can when you're starting out. Well, it depends. Like I said, like it busts through that moving average, yeah, hold on.
Yeah.
But if it goes up to this and it wicks over here, kind of like this one did,
Mm-hmm.
then be careful because the same thing that happens up can happen down.
Yeah.
But right here, it's like this candle is good. It's a full body. It's busted through. It held. Didn't even wick down.
Yeah.
Like that. That's a strong candle.
Yeah. And
So you
then
know there's gonna be room up.
for sure. And this is like I also have a daily under over level that I found on MES like a while ago. And you see this under over level, it's right in the middle of that doji. It's almost in the middle of that doji. It's a good one.
Mm-hmm.
So when I saw it hold that level, plus there's a Bollinger Band. And what I was really looking at anyways was the 10 SMA. I mean, that was a really good hold. Like obvious, like not maybe not obviously, but I wasn't looking this far into the future because it's kind of like things happen when they do, but it makes sense that it happened here.
Mm-hmm. I see it hold that level.
Yeah, totally. And I'm
Uh,
sure, and at the time, I'm certain that I noticed these two dojis because I'm in the habit of looking to the left now. You know,
yep.
a few days ago,
Look
so
to
I
the
don't remember
left.
precisely, but there's like no reason why I wouldn't have done that. Well, you know,
Hmm.
there was the red versus the green, so like it was still a really good thesis and a really good play out. Um, I didn't need to pay this, but I learned something from paying it. Um, and like when you see a major level like here down, yeah, try the candle close and not the hard stop. You know,
Yep.
hard stop on candle close.
Like if this was free floating, like this line wasn't there, then yeah, for all means,
Right.
get
Yeah.
out, stop out, and get back in, just like you did right here.
Yeah.
Your stop would have been right there, and boom. That just goes to show that not all trades work out, even though
Yeah.
it's your setup.
Right.
Um,
The ones that don't work out, laser focus even more and see if they've got another leg, another entry, uh, a level that you didn't take into consideration beforehand. It's something.
yep,
Look for clues. It doesn't mean there's going to be a good place to enter it, but there could.
yep. Cool. Thanks for sharing.
Hey, my pleasure.
Um, next week we get into adding another strategy or optimizing a second strategy out of Easy's first
Playbook.
strategy. Yeah. So you got the 10-50-50 cross, right?
Yeah.
We might throw in, since you're using the 200 SMA and the 666, we might throw that play into it too.
Okay. All right.
So still focus on the 10 SMA strategy play that you use.
Yeah. Mm-hmm.
And then look at that screenshot because it has a 200 666 moving average bounce play. And then we'll slowly jump into the moving average strategy.
Perfect. 666
Cool.
bounce. Yeah, it had the 666 bounce. Okay, so 1050 for this week, and sticking to my rules no matter what. Keep on journaling every trade. And
Yep.
lastly, what is the lastly? Do I have a lastly? Well, yeah, and I'm gonna continue with that book, The Hour Between the Dog and the Wolf. I'm only at chapter 3. So because like I said, this book is a bit hard because of the terms that they're using. I have to listen to it at normal pace. I cannot put 1.2 because I don't understand anything. That's it.
Yeah, I have to listen to each chapter like 2 or 3 times and be like, oh, okay, now I get it. But definitely eye-opening to how the market works and how your body works when you're trading. If you have hard time with your emotions or something, this book will help you kind of be like, well, maybe I need to work out before I trade, or maybe I need to go punch the bag, or whatever it is. Go for a walk, take a breath,
Yeah.
meditate, whatever. The only bad thing is you can't test your hormone levels like instantly.
Yeah.
So you won't know if your hormone levels are out of whack. But when you feel it, you're either tired or you're really energetic.
Yeah.
Um, and it'll help you kind of put those feelings in check, or kind of tell you like, don't trade. Best trade is preserving capital.
One of my big ones is feeling irritable. If I'm irritable, like that's a huge red flag.
Yep. And if you feel any type of way during the week, easy, like just call the day off. Like just take a day off. Like literally go decompress for a whole day.
Yeah. Thanks.
Um, yeah. So thanks everybody for showing up, and we'll jump deeper into easy strategy and start optimizing and adding the second play. You guys have a great weekend.
All right, you guys. Later.